Hello everyone. This video covers section 8 of the CPP exam, depositing and reporting withheld taxes. The good news is we are already halfway done through the material. Now this section is covered in two parts. Part 1 will give you the review of all the material in general, and in part 2 I have gathered some multiple choice questions and true-false questions for your practice. Now this section covers a lot and everything in this section is really very important. I remember I saw at least 8 to 12 questions from this section when I took my exam. Now let's look at the topics that are covered under this section. Identify employer identification numbers and how to obtain them. Define payroll tax deposit rules and deposit frequencies. Identify the methods of depositing payroll taxes. Review penalties for the failure to file and deposit on time. We will also review the form 941 and some other forms that are related to the payroll taxes. So without wasting any time, let's get started. What does the IRS and the Social Security Administration use to identify the employer? It's the Employer Identification Number. The EIN is a 9-digit number and the format is first 2 digits and then a dash and then next 7 digits. What form is used to apply for the EIN? The new employers use form SS4 to apply for the EIN. Can the employer use one EIN for multiple businesses? No. Each trade of business should have a separate EIN. The affiliated corporations can have one EIN. In case of merger or acquisition, which EIN should be used? If the merger or reincorporation is a reorganization under Internal Revenue Code, then the surviving corporation should use its previously assigned EIN. If the new corporation emerges from consolidation that it does not qualify as reorganization, then the new EIN must be applied for the new corporation. What method is generally used to deposit the federal income tax and the employment taxes? Beginning with the payroll tax deposits based on wages paid after December 31, 2010, they may not be mailed because they must be made with the electronic fund transfer through the EFTPS. Federal tax deposit coupons and paper checks are no longer acceptable as a method of deposit. The form that is used by the employer is called 941, which is the quarterly payroll tax return. And the taxes that are reported on that is the federal income tax that is withheld from employees' paychecks, employees' portion of Social Security and Medicare, and employers' portion of Social Security and Medicare. What are the payroll tax deposit rules for 941 taxes? The employers that file 941 are assigned one of the two deposit rules: monthly depositor and semi-weekly depositor. So either the employer will be a monthly depositor or semi-weekly depositor. If the employer reported 50,000 or less on the form 941 for the look back period, then the employer is a monthly depositor. And if the employer reported more than 50,000, then the employer is a semi-weekly depositor. Now, how is it determined if the employer is monthly depositor or semi-weekly depositor? The determination is based on the total liability for federal income tax, Social Security, and Medicare tax during the look-back period. Now let's see what is a look-back period. Look-back period is 12-month period ending June 30 of the previous year. It always involves 2 previous years. one immediately preceding year and the other one before that. And it always ends on June 30. So for the previous year, we are looking at the first two quarters, the January to March first quarter and April to June the second quarter. And for the year before that, we are looking at the third and fourth quarter, that is July to September and October to December. In this example that we have, we are looking at the look back period of the calendar year 2021. So if you look at the first and second quarter, they are from 2020, and the third and the fourth quarter are from 2019. So the look back period is third, fourth quarter of 2019 and first, second quarter of 2020. So during that all four quarters, if you reported 50,000 or less for the 941 taxes, then you are a monthly depositor. And if you reported more than 50,000, then you are a semi-weekly depositor. Now let's have a look at when the deposits are due for monthly and semi-weekly depositors. Monthly depositors. Monthly depositors must deposit their accumulated tax liability for each calendar month by the 15th of the following month. Semi-weekly depositors. For semi-weekly depositors, the payroll tax liability for wages paid on Saturday, Sunday, Monday, Tuesday must be paid by the following Friday. And semi-weekly depositors must deposit their payroll tax liability for the wages that paid on Wednesday, Thursday, and Friday by the following Wednesday. If the employer accumulated payroll tax liability reaches 100,000 on any day during monthly or semi-weekly deposit period, the liability must be deposited by the close of the next business day. What happens when the semi-weekly periods bridge two quarters? So if the employer is a semi-weekly depositor and the employer pays wages in 2 days that fall into different quarters, then the employer must make two separate electronic deposits via the electronic fund transfer. When can the employer pay the tax liability with the Form 941? The employer whose tax liability for any quarter is less than 2,500 can pay it as per the deposit schedule, means either monthly or semi-weekly, or he can opt to pay with the Form 941. But the quarter liability should be less than 25. Who should file the Form 941 in case of a consolidation or a merger? The surviving corporation must file Form 941 for the quarter during which change took place and report the wages paid and taxes withheld by both companies. The discrepancies will result in year of the merger and consolidation, and that should be explained in Schedule D, where you can remember D by the word discrepancies. Now we talked about the deposit rules for monthly and semi-weekly deposits. Now we are going to talk about the due dates of the Form 941. So what are the due dates of Form 941? 941 is filed every quarter. So for the first quarter that runs from January to March, the due date is April 30. And then the employer gets automatic extension up to May 10th if all the deposits were done on a timely basis. Quarter 2, April to June, July 30th is the due date with automatic extension August 10th. Quarter 3, July to September, due date is October 31, automatic extension till November 10th. And then fourth quarter, October to December, due date is January 31, automatic extension February 10th. There are some employers who file Schedule B with 941. They are the semi-weekly depositors and monthly depositors who accumulated 100,000 during the month. So either the employer is semi-weekly depositor or the employer was monthly depositor but accumulated more than 100,000 during the month. So they will have to file Schedule B. And what is reported on Schedule B? It's the employer's payroll tax liability. Not payments, not the deposits that they have made, but the employer's payroll tax liability. And it contains three sections, months 1, 2, and 3, which corresponds to the 3 months in the quarter. So if you're doing the quarter 1, it will be January, February, March. If you're doing quarter 2, then those 1, 2, 3 months represents the April, May, and June. And each month is divided into 31 blocks where the employer should enter the tax liability incurred each day of quarter. Now let's learn about a shortfall rule. What is a shortfall rule regarding employers' federal income tax and employment tax obligations? The IRS allows safe harbor shortfall. Employers are not penalized if the amount of the shortfall is no more than greater of $100 or 2% of the entire amount due, and if the original deposit was made timely, and if the shortfall is deposited by appropriate make-up date. So for monthly depositors, the amount of the shortfall must be deposited or remitted by the due date of the quarterly return for the quarter during which the employment tax liability was incurred. For semi-weekly depositors, the shortfall must be deposited by the first Wednesday or Friday, occurring on or after the 15th of the month after the month during which the original deposit was required to be made, or if earlier, by the due date of the quarterly employment tax return for the quarter during which the original deposit was required to be made. Now let's look at the employers who do not have to file the quarterly return 941. If the employer is a seasonal employer, he may not have to file it every quarter. If the employer has already filed a final tax return, then he doesn't have to file the 941. The business is closed, right? Now, only non-payroll items are paid. Then the employer will not file the form 941. He will file the form 945. The yearly tax liability is less than $1,000. Then he will not file 941. He will file 944 after he gets the instructions from the IRS to file the form 944. If the employer only paid to the household domestic workers, then he will not file the form 941. He will report that on Schedule H of 1040. And the employers who have only agriculture workers, they will file the form 943 instead of the form 941. What is the form 945 used for? The form 945 is used by employers to report amount withheld throughout the year from non-payroll items. What are non-payroll items? Like pensions, annuities, gambling, backup withholding from the independent contractors. So anything that is not related to payroll is reported on form 945. Any amount withheld but not yet deposited must be paid with the form. The form is due by January 31 and automatic extension is up to February 10th. What is Schedule R on form 941 used for? Schedule R form 941 is for it's the allocation schedule for aggregate form 941 filers. It is filed to allocate the aggregate information reported on Form 941 to each of the reporting agent's clients. So if there is an agent who is reporting 941s of all his clients, he will report a Schedule R as an aggregate form. Now here is the list of all the forms that are covered in section 8. You can pause the video and go over the list. And I also have made a separate video which has a lot of practice questions on the forms. So you can go over that also. Let's talk about some of the errors and the corrections on the Form 941. If the employer discovers that the FIT is under collected or over collected, and he discovered that before the 941 is filed, then the correct 941 should be filed. Reimburse the employee for the overpayment amount before the calendar year ends in which the error was made, and get the receipt from the employee. If the under collection or over collection is related to the Social Security and Medicare, but it is discovered before the 941 is filed, then correct the 941 before filing, reimburse the employee for overpayment amount before calendar year ends in which the error was made, and get the receipt from the employee. Let's say that the employer discovered the under collected or over collected federal income tax after the 941 is filed. In that case, he will file 941X, which is the amendment form, no later than the due date of 941. Then there will be no penalties on the underpayment. Reimburse the employee for the overpayment amount before calendar year ends in which the error was made, and get receipt from the employee. If the under collection or over collection of the SS was discovered after the 941 is filed, in that case again the employer will file 941X no later than the due date of the Form 941. Then there will be no penalties on the underpayment. Reimburse the employee for the overpayment amount before the calendar year ends in which the error was made, and get receipt from the employer. If the employee was reimbursed in the following year, then the employee must be issued a Form W2C. Now let's discuss the different types of penalties that IRS can impose. The first set is for the penalties for failure to deposit 941 taxes on time. So this is only for the failure to deposit the taxes on time. 2% of the undeposited amount if the deposit is within 15 days of the due date. 5% of the undeposited amount if it is deposited within 6 to 15 days of the due date. 10% of the undeposited amount if it is deposited more than 15 days after the due date. And 15% of the undeposited amount if it is not paid within 10 days after employer receives its first IRS delinquency notice, or on the same day that the notice and demand for the payment is received. Next is penalty for the late filing of employment tax returns. Unless an employer has the reasonable cause and is not guilty of the willful neglect, the late filing of the Form 941 or other employment tax returns result in an addition to tax, the amount of which depends on how late the return is filed. And this amount is 5% of the amount of tax required to be shown on the return after accounting for deposits and credits for each month or the fraction of the month that the return is late, to the maximum of 25%, and 15% per month to the maximum of 75% of the unpaid tax if the late filing is fraudulent. Let's look at the last section, penalty for the failure to pay withheld employment taxes. Now the taxes are withheld, but the employer has not submitted it. So addition to the tax due, 0.5 to 25% for each month payment is late. Additional 0.5 to 25% in tax not paid within 21 days of the IRS notice. and 10 days if the amount due is $100,000. These penalties increase to 1% for each month beginning 10 days after the IRS notice. Any withheld Social Security, Medicare, and federal income tax that is not paid to the IRS also accumulates interest of federal short-term interest rate of 3%. Now this is the last slide of this video, and in this slide we will discuss how the employer reports the withheld taxes to the employee. So once the employer pays wages and withhold taxes, he must report to the employees the wages paid and taxes withheld, and this is reported, as we all know, on W-2. In case of merger consolidation, who issues the W-2 to the employees of the absorbed company? When two companies merge, one company absorbs the other company. The survivor company must issue W-2 to the employees of both absorbed and survivor company. What are the 6 parts of W-2 for? So W-2 has 6 parts. Copy A. This is for SSA, and it must be submitted to SSA by January 31 after the year to which the form applies. And copy B, C, and 2. These are employee copies. Employer must send them to the employee by January 31. Copy D is retained by the employer, and copy 1 is sent to the state and local agencies. And this video ends here. In part 2, we will practice W-2 box 12 codes, so stay tuned for that. If these videos are helping you to prepare and practice for exams, please do like and share. I will see you soon in the next video. Until then, goodbye.